What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I love high yield investments and I love real estate investment trust. These are some that are very underrated that I have been buying. And some of you have watched my videos before, but again, the long-term goal is to use the WeeklyPay ETFs to buy dividend growers. And that's the goal. Because right now, it appears my estimated, without these weekly payers, is going to be around 3,000 or so. Because I was just paid $935.67. But again, it's the start of the week. And I got to really build up that dividend portfolio, the dividend growers. Yes, I have a lot of holdings, but my income can probably compensate that. Again, I'm not going to retire tomorrow. I'm not going to retire in 5 years. I'm going to wait about 10 years and then maybe make a decision. Because, again, I may even do it later. I may just flip it and then see how things go. But you have to rely on growers and consistent income. I don't like getting paid 70 cents a week and then 140 the next week. It just doesn't make sense to retire on. It's just not worth it. But these REITs are worth it. Let's check out these REITs right now. This one is a deal. Four Corners Property Trust sitting at $23.97. So the recent earnings report were very promising right here. Now, again, it was missed by 0.37%. You see an acquisition too, but its revenue has gone up. So I've liked these trends with Four Corners Property Trust. And why don't you check out and see what's in them? Let's go to their website. They're an independent, publicly traded company that owns, acquires, and leases restaurant and retail properties on a net basis. Their primary goal is to create long-term shareholder value through growth in their asset base and the payment of consistent cash dividends. To achieve the goal, they pursue a business strategy to focus on opportunistic, stable acquisitions and tenant diversification. They have 1,273 properties, 48 states, 170 brands, and that is something that's very important. But I'm going to jump to the financial and operating costs real quick, and then we'll jump to their portfolio. One thing I want to go over is they received rent payments representing 99.9% of their portfolio base rent for the quarter ending on September 30th, 2025. AFO diluted per share third quarter was 45 cents, and that was a 2-cent increase from the same quarter of 2024. Also, the diluted share in 9 months ending in September 2025 was 133, representing a 4-cent share increase compared to the 9-month period in 2024. Let's go over one more thing. And again, you see the FFO was an increase by 1 cent. Right, again, for the 9 months ending in September 30th, it was a 2-cent increase. So I like that. Let's go over their portfolio. They're a main landlord, so they're greater than 10% in Ohio, which is pretty cool. Texas, they're greater than 10%. Actually, you know what? Ohio is about 5 to 10%. Texas is greater than 10%. So they're a big landlord for medical, retail, auto service, quick service restaurants, dining and casual, Cheddar's. We have B-Dubs. We have Outback, Chili's, Longhorn, and Olive Garden. So that's one thing that's very good. And they're also in the auto service and medical retail. So they're a little bit diversified as well. Let's jump to the next REIT that I've been buying. Easily, this one I've been buying. Essential Properties Realty Trust. $29.67 is how much it is right now. And again, think about it. Let's go to their website and I'll show you what they're about. They have a diversified portfolio using an investment strategy that focuses on properties leased to tenants and businesses such as restaurants, again, car washes, automotive automotive services, medical services, convenience stores, entertainment, health and fitness, early childhood education, and other services. Now remember, if you look at my videos, and if you're new to this YouTube channel, I have said, and by the way, subscribe if you're new, I give you free content all the time. I have explained the arms race that I saw with a lot of these real estate investment trusts. And the arms race was the car washes, which I own Getty Realty. That's one that I've been posting videos about numerous times. But this, again, these companies are adapting into the arms race of car washes. I saw the trends, I've studied them, and I went in. Now let me go over their portfolio. They have 2,266 properties, 99.8% leasing. So again, car washes, early childhood education right here, medical, dental, quick service, automotive service, entertainment, casual dining. So they're well diversified. Pet care services, movie theaters, building materials, home furnishings. I don't know, reminds me of Realty Income a little bit. But they have done really well with car washes. I don't feel completely sold on early childhood education, but they're so big and diversified. If one little section gets hit, they're fine. And I'll show you the most recent earnings. Funds for operations increased by 8%. Adjusted funds for operations increased by 12%. So you have 52 cents right there for the FFO that has went up, and the adjusted funds for operations, which are 48 cents. So that is something that is very attractive to me. When these numbers go up and the revenue has gone up, that's very nice. And I'll even show you their revenue. Early for financials are 144.93 million. That's quarterly. It was up 23.74%. Its earnings, it's won by 5.84%. So you have some nice things going on. And remember, funds for operations for REITs are extremely important. Forget about, PE ratio. There's really, who cares about PE? You look at funds for operation. Let's jump to the final one. I am back in National Health Investors. It's at 76.17 right now. It has a really nice dividend yield of 4.83%. In its financials right here, revenue has been up 8.19%, and net income, I don't really care about net income that much. I care about the revenue trends, which is 8.19%, and that's up. And it's 92.19 million. But the thing is, what are they about? So they're a real estate investment trust specializing in sale, leaseback, joint venture, mortgage, and mezzanine financing of need-driven and discretionary senior housing and medical investments. NHI's portfolio consists of independent, assisted, and memory care communities, entrance fee communities, skilled nursing facilities, medical office buildings, and specialty hospitals. So here's the thing that's important. Let's look at their portfolio. They have been growing every time I go to their website. Now, I sold them at one point, and I'm rebuying them. 212 properties, 38 owning partners in 33 states. They are getting bigger and bigger. So there's skilled nursing facilities, senior housing, specialty hospital, and shop. Okay? So they're getting bigger and bigger. And you notice in the Midwest, they have been blowing up recently. So I've been going in and buying them. Now, their earnings report I'll go over as well. They're going to release it tomorrow. So I'm going to look into that. I'm very excited to see the earnings reports on NHI and go from there. But this is something that I have been looking at long-term investing, high yield, long-term investing. This is what I want. Now, again, with REITs, remember taxes, go to your tax advisor and understand what REITs and what happens. Basically, you make $500 in passive income in REITs, that counts as making $500. So be aware of that. So these are the three that I've been buying. And I'm going to go back to my basics, my dividend investing strategy, evaluate stocks, evaluate dividend growers, and enhance my dividend investing strategy and show you why I'm buying things. You shouldn't be buying things anyways because I buy them. Just showing you my passive income journey and my thought process with buying these stocks. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so not miss future videos. I'm going to try to squeeze in a video for you tomorrow. The power was having some issues and it was just a pain in the butt. So take care and have a good one. I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, can lose money, so be aware and do your due diligence. Go to a financial advisor for financial advice. Go to a tax advisor for tax advice, please. You have to do your due diligence when it comes to investing. You can lose money. Don't buy things because I buy things. I'm just being very straightforward. My passive income journey is for entertainment purposes only. Take care. You have a great Dividend Warrior Wednesday.